Okay, hey guys. So today I'm actually not going to be live trading just because of the market conditions, the news. These are just not conditions that I want to trade in. So I'm just going to basically be talking about the power of patience and knowing when the market gives us conditions not to trade. So the power of patience, developing the mental strength not to trade. So the way that I identify no trade conditions would just be there's low volume, so there are weak trends, lack of momentum, there's smaller price movement. Two would be high impact news. So any speeches that have heavy impact, such as like inflation, unemployment, GDP, CPI, stuff like that. Consolidation as well. So again, no real movement. Prices just moving sideways, being clumped together. And then unclear price action. So lots of wicks in both directions, which indicates basically indecisive of like how the market's going to go. So again, small candles, which shows no, good moment, no heavy momentum. And then fake breakouts. And then your usual confluence isn't aligning, and again, news. So again, today the market's conditions lack clarity and structure that I need in order to take high probability setups. So it's a mixture of things. So price is choppy. The volatility is significantly reduced, um, and just different things like that. So these are just a couple of quick reads from forexfactory.com, which is where I check my news every day that I'm going to be trading. Um, that's a good news source if you guys want to check that out. So just different things like the EU could hit Wall Street where it hurts with the tariff response. Powell says tariff inflation could be more persistent as Trump urges him to cut rates. So when you first, wake up or whatever time of day you trade, you want to obviously check news, and you also want to watch out for some red flags that will let you know maybe this day or this time isn't the best, to trade in. So a couple red flags are you're unsure about the trend. So that could look like consolidation where it's just staying sideways a lot of the time. So prices in the middle of a range. So let's say for instance, one of the indicators you use is, the stochastic or the RSI. So let's just say it's fluctuating in between that 70-30 or the 80-20 zones, just staying in the middle. So again, that's consolidation. So if you feel the need to force a trade, just to get something going, that's usually not a good sign. You never want to feel anxious or take a trade out of pure boredom. Another red flag would be past or upcoming major news. So again, like the Trump stuff, the Powell stuff, unemployment rates, everything that you can kind of find on Forex Factory. Another one would be you can't define clear take profits or stop losses, which are super important when trading standard forex. Is you don't need them when you're trading binary. However, your entry depends on where you're going to exit, so that's pretty important as well. So a few things to ask yourself would be, does this align with my strategy rules? Am I trading structure and confirmation, or am I just trading an idea? So basically, am I just hoping for, price to do this when there's really no indication that it will go up or down? So you're just kind of hoping that it plays out, in your best interest. Another thing that I always ask myself is, would I take this exact same setup again if I, back tested it a couple times? And if the answer is no, that's usually a good indication not to take the trade. So next is the psychological trap of FOMO, which is just the fear of missing out. So honestly, if I don't see a setup, I'm not going to take a trade, especially if it doesn't align with all of my confirmations that I have in place. So me personally, I like to have anywhere from 5 to 6, kind of confirmations that I should be taking this trade. Let's just say I see 3 or 4 out of those 5 or 6. I'm still not going to take the trade, even though I do see some. It's just not in my best interest to. So I'll end up skipping that and waiting for another good entry. So a big part of being a great trader is knowing when to stay out. Capital preservation is just as important as capital growth. So FOMO basically, looks like you're anxious to take a trade, you're taking a trade out of boredom. Let's just say you've been on the charts for, I don't know, 15, 20 minutes and you're just not seeing anything good. You're like, there has to be something, even though there's like no setup. You're just kind of forcing it. And that leads to losses, which can result in revenge trading, which is you basically just trying to chase your losses to either break even for the day or to make what you lost and, make a profit for the day, which is not good because you're already going against your trading rules that you have in place for yourself. And then again, forcing trades because you feel the need to trade, or out of boredom. So some things that I just see on social media, sometimes in the chats, or just different things like that, is something along the lines of like, I haven't made money all week, something needs to happen. um, everyone else is making money, they're taking trades, why am I not taking trades? So those are definitely, things to think about. However, that doesn't mean you're doing anything wrong. Me personally, I would rather protect my money than just enter a bunch of risky setups, and ultimately lose whatever capital that I have. So FOMO causes many traders to take poor setups out of impatience or greed, which I just talked about when I was explaining revenge trading, and trading out of boredom and stuff like that. So you might feel the urge to do something, just to be active in the market, and that's not good. Missing a trade doesn't mean you're missing out on money. Forcing trades leads to losses and emotional damage. So again, just forcing a trade just because you want to do something, you're bored, or you feel like it could be a good time to make money, even though the confluence isn't there, the overall market structure isn't there, and stuff like that. So obviously, you're going to be losing financially, but you'll be losing emotionally as well. And again, that goes into play with revenge trading, trying to catch up with your losses. So next, we're going to talk about what makes a trade worth taking. So again, no setup, no trade. So clear market structure, so reliable patterns, whether that's flag patterns, wedge patterns, double tops, head and shoulders, things like that, as well as you see that there's clear trends going on. So there's a clear downtrend with lower lows and lower highs, or a clear uptrend with higher highs and higher lows. Strong confluence, so basically your little checklist before you enter a trade. So technical factors aligning equals a higher probability trade, which is great. We only want to take those. So clean candlestick confirmations. So again, with a candlestick chart patterns, you want to make sure that there are clean candlesticks. So like if I see a bunch of dojis forming, I kind of want to stay away, or a bunch of candlestick patterns with wicks forming in both directions, which just shows that the market is indecisive on which direction it wants to go. So another great sign that a trade is worth taking is it fulfills your trading plans. So, let's just say you trade this pair when you see X, Y, and Z, or you trade when you just see a plethora of different things that align with your strategy. That's great. Another thing is favorable risk to reward ratio. Um, and then the last one just being emotional neutrality. So you're not trading because you're bored. You're not trading because you haven't traded all week, or you're not trading because you're frustrated or anything like that. So discipline is a trader's greatest weapon. So sitting out of a bad market is a sign of maturity and emotional control. It doesn't make you a bad trader because you feel like you aren't able to trade in these conditions. The best traders actually do sit out a lot of times when things don't align with their trading strategy. So trading is 80% mindset. I think it's a little bit more in my opinion, but it's 80% mindset. So your ability to wait for your setup without anxiety or doubt separates you from the gamblers. And that's another thing. So if you constantly catch yourself trying to force a trade while the market conditions aren't favorable, you're more so of a gambler. You aren't really taking the skill set serious. So that's what's going to separate you from, being serious or just being a guesser slash gambler. So your system is here to protect your capital. So it's better to be the calculated sniper instead of the reactive gambler. Because when you're the sniper, you're looking for X, Y, and Z. And if you don't see that, you're going to wait until you do see it so you can get the best possible entry in a setup instead of just being the reactive gambler when, okay, price is doing this, so let me hop in here. Okay, now it's doing that, so let me do the opposite thing. So what you want to do is reinforce your strategy rules. You want to reinforce your strategy rules. What conditions must be met before you even consider entering a trade? So make sure if you trade four pairs, be sure you're looking on those four pairs. You're not really wandering around anywhere else just because there's nothing there to trade on those pairs that you usually trade. Also, notice how forced trades often come from abandoning your checklist. So again, just your daily checklist. Whenever you trade, you do, I don't know, however many things you have on there. So notice that if you veer away from those, the outcome of what happens. So if the environment, aka the market, doesn't match your system, then your system won't work at that time. That doesn't mean it won't work forever. That doesn't mean you need to switch up your trading style or necessarily switch up the times you trade, especially if it's been working in the past and market conditions are just bad for that day, that week, or however long the case may be. So next we have capital preservation. Yeah, so next we have capital preservation. So not losing money is a form of winning. Protecting your capital during unclear conditions mean that you have more equity and confidence to execute strong trades when the market does, shift back to normal. Your first job as a trader is actually to protect your capital and not grow it. So the money that you don't lose today, if you were to, we'll speak for today, the market conditions are bad. So whatever money that I didn't lose today, that's just a better opportunity that, I can win and, make a profit on Monday when I do trade again. So the goal isn't just to trade, is to trade smart. And so that often means waiting. So whenever I do live trade, sometimes just for the sake of the stream, I'll, try to find, setups pretty quickly, still making sure that they're high probability. But a lot of times, sometimes I'll just be on here for 10 to 15 minutes, just looking for a good entry, just scanning different pairs, different indices, commodities, things like that, just so I can ensure that you guys understand that it's important to just wait and not just, hop in any trade. So this is something that I took earlier. So this is an example of good market conditions. So this was Nas 100, and I just did a quick little markup. So as you can see, there's a downtrend. We have new lows forming, lower lows forming. Um, this zone, it is showing slight consolidation since it just isn't consistently going up or down. However, if we take a deeper dive, we can see that after this low, there's a high formed, a new high, a higher high, a higher high, a higher high, and just different things like that. I could have marked it up a little bit more, but I just wanted you guys to, get a broad aspect of what good conditions are. So I'm clearly able to see that there's a downtrend. I can see that because there are lower lows and lower highs. I have a good support and resistance area right here. There is, pullbacks here and there. Again, higher highs and uptrend, and things like that. So down here is an example of what bad market conditions are. So this one up here is just from TradingView. So using like standard Forex. This one is for binary, which is the time-based one. Just for me personally, I wouldn't trade in these conditions just because you can see here, there are gap ups, there are wicks in both directions. There's no real movement. Overall, it's consolidating. And as I was saying earlier, when price gets stuck in between a range, so this is the stochastic. So above the 80 is overbought, below the 20 is oversold. As you can see, a lot of times it just kind of ended up in between, and that's not really ideal. You can see here as well, just being oversold for a while, kind of staying in that area in the middle. And then just based on the candlestick patterns and, the overall just choppiness of it, these aren't the best conditions to trade in. So that's why I just skipped out on today. Um, so next we have journaling, which is very important when you're trading. So a lot of brokers and platforms that you're going to be using to trade, they do keep track of, what time you took a trade, what did you trade, how long you were in that trade, how much did you risk, how much did you get rewarded, stuff like that. However, I always recommend physically writing it down. That way, you're writing it, you can see it, it becomes more real. So things just to ask yourself are, what conditions keep you out of the market? Was it the news, or was it because there's no real movement in the market or low volatility? Whatever the case may be, just write that down. And then also ask yourself, what would the outcome be if you force these trades? Realistically, do you think, you would have made any money? Do you think it would have reversed? Do you think there would be, like, just kind of back test and really ask yourself that question? Just whatever you think the answer is, whether it's, price could reverse, or, blah blah blah. So doing that, as well as tracking your trades, as far as, how many trades a day are you taking? What are you trading? Do those pairs move alike? Do they move opposite of each other? Um, just things like that, just tracking your trades. So it builds awareness, patience, and also just overall growth while, developing your trading skills. So the next thing you would do is just execute this the next time you're analyzing the market. Um, this is something you want to do every day, before you trade, to be honest. So check news, look at the conditions, ask yourself, or do these look like good conditions to trade in? If so, keep that in mind. Use your mental checklist, or look at your checklist to make sure all of those things are, on the market or on the charts that you see, in order to help you be confident in that, trading day or session, or whatever the case may be. Um, that's all I have for today. Yeah, that's all I have for today. So if anyone has any questions, feel free to ask them now or drop them in the comment section or anything like that. And I'll definitely answer them.